Hello. Okay, so I think I am now live. Nice to see you guys. I'm just trying to find out where I can look at the comments. I've not done a stream before. I've just started doing this channel where I'm sharing my due diligence. So yeah, just finding the stream also on YouTube. Basically, I've just stayed behind after work and done a bit more because so much information has been coming out about CineWorld and I've been struggling to keep up with it all week. Stayed behind after work and really got into it today. And I could do a video, but basically every video I do is on a Wednesday, so I wouldn't be able to get this information that I've collected out until Wednesday. So this should be a short stream. Um, and if you've got any questions, please put them in the comment section while I'm making this. But I don't expect there to be many people coming in here. I've just posted it on Reddit at about 9:30 in the UK. So yeah, but I'll be checking the comments. So if you leave a comment in there, then I'll read it there. So yes, I'll be sharing my screen. And here it is, my Cineworld facts. And we'll start at the beginning. So first things first, Cineworld went down a lot at the beginning of this week when Saba here, who I'd never heard of before, posted this tweet. Cineworld is preparing to file for Chapter 11 bankruptcy in the US as soon as tonight or tomorrow. That didn't actually get retweeted that much, so credit to someone on Cineworld stock Reddit page. Really recommend, if you've got shares in Cineworld, to be on that page, because this is where I got this information and it doesn't seem to be shared that far wide. And when this was posted, there was no firm indication, there was no announcement from Mookie or Cineworld or an actual sort of legitimate press agency that this was happening. So she was actually getting quite a lot of backlash when she posted this. However, she did turn out to be right. The next day, Cineworld today has filed for bankruptcy officially, specifically bankruptcy protection, I think it's worth saying. So then, but she has also, since she was right about this one, I thought it was worth putting in this here. She's also subsequently posted, hard to see Mookie Grödinger will find a role to stay much beyond the Chapter 11. So this seems more like pure speculation on Saba's part, and she does seem to be a bit of a shit stirrer looking at her Twitter page, but she was right yesterday, and I don't know that much about her. So maybe she does know more than I think. I don't go on Twitter much, but maybe I should be following her. But what we have learned since Cineworld have posted their bankruptcy filing is we got to see their total unsecured debt. So I'm just checking. And so yeah, 417 million. First of all, what is unsecured debt? Unsecured debt is debt that refers to loans that are backed by collateral. If the borrower defaults on the loan, are not backed by collateral. If the borrower defaults on the loan, the lender may not be able to recover their investment because the borrower is not required to pledge any specific assets as security for the loan. Because unsecured loans are considered riskier than for the lender, they generally carry a higher interest rates than collateralized loans. So Cineworld doesn't have an enormous amount of assets beyond a bit of real estate. Like, their revenue is so enormous, they require big loans, and so basically they have to take very high interest rates in order to secure these loans, and that's what they've done. They've got high interest rate loans, but these loans aren't secured against anything, so it's not like these debtors can just take the assets and sell them. That's all this means. That's what unsecured debt is. It doesn't tell us a hell of a lot at this point, because there's definitely different types of unsecured debt. Okay, so breaking down the unsecured debt, the smallest portion of it is, I've grouped all of these portions together because they don't make up very much: construction, rent, professional services, and settlement agreements. So I believe unsecured debt could just be like construction's begun on a project and another company was meant to be paid upon production being finished, and Cineworld can't honour that right now. So that's what could potentially be unsecured debt for these construction sites, but it just totals 50 million, so that's not very much, as you'll see going into the next ones. The other type of unsecured debt is trade debt. So the trade debt, like these ones, I don't know who they're from. It's all different investment banks, but these ones were interesting. Lionsgate Films, Disney, Universal, Walt Disney, Warner Brothers. Warner Brothers. What I think this is what it will potentially cost Cineworld to rent the films, to put them in the cinema, and then they will, it could be what the films are in the cinema currently. Basically, Cineworld have to rent these movies to broadcast them, and these studios charge them. I'm wondering if this is just what they've got to pay these agencies back. Anyway, it's not very much money. That's why I think it is film rental. It would make sense to me that this was film rental. And so and it also makes sense that that's why there's no Paramount here. That, for instance, with Top Gun Maverick, it's not payment in the past. It's the fact that these companies have lent Cineworld the film, and so Cineworld now owe them this much money back. So Walt Disney have lent them some film that's going to be going to cinema. As the film generates ticket sales, Cineworld have to pay that much money back. So that's the box office sales. Then we've got the biggest quantity of debt, biggest portion of the debt, which is bank loans. So you've got these two aren't very much, but then you've got BNY Mellon, which interestingly had a typo on it on the document. I'm fairly certain it's BNY Mellon. Looking at other news articles, there was a lawsuit between BNY Mellon and Cineworld, and I'm very sure that it's double L, but it seemed to say single L in the bankruptcy filing document. But yeah, the notes on BNY Mellon, here they are. They own some leases that Cineworld have to pay. So the unsecured debt is lease payments, and so I feel like this could be stretched over a long period of time, this amount of debt. It just seems abnormally high. This is where it can get very convoluted debt, because I typically like quoting cash flow, and generally speaking, you're not usually worried about the company going bankrupt. And Cineworld typically have tremendous cash flow and then don't at the minute, and it gets very hard trying to work out how much the different debt is going to cost, because interest rates and everything can change. But anyway, this could be stretched over a long period of time, in which case it would be unsecured debt. But I did find an interesting article. BNY won a lawsuit against Cineworld. Cineworld was trying to sue BNY to not pay debt during the pandemic, where they couldn't have the Cineworlds operable. So let me just read this for a second. The court also made it clear that even though the premises could not be used for their intended purposes due to lockdown, that still did not deprive the leases of business efficiency. Oh god, I looked this up on Google. Basically, business efficiency means that the Cineworld potentially could make money, because I guess they have businesses all around the world. The fact that that site was closed didn't mean that Cineworld couldn't pay their rent. At the end of the day, it was a matter of negotiation between the parties as to whether the risk would lie, as to where the risk would lie, and the fact that the risk was left with the tenant did not necessarily mean that the leases lacked commercial or practical coherence. So basically, it wasn't the renters. It wasn't the landlord's fault that Cineworld couldn't make money off the property, and therefore it's not necessarily them who should have to forgive Cineworld of paying the rent, which is fair enough, but it's unfortunate for Cineworld because they are being forced to shut their stores. They're not making money, and so they can make a fair argument that they shouldn't have to pay rent on that property. It's just that the court didn't go with it, and I can understand that decision. But one of the reasons that BNY might be pushing a little bit harder for their money is looking at this. BNY Mellon to take 100 million hit to quarterly revenue from Russia pullback. So BNY losing 100 million, which I assume is quite a lot of money to them, due to Russia, the Russia situation. And this is in March 17, 2022, so quite recently, BNY, the US custody bank, says that it expects 100 million revenue hit in the first 3 months of this year, stemming from its decision to pull back from Russia and Western sanctions in response to Vladimir Putin's invasion of Ukraine. And so, if creditors are pushing on Cineworld, it doesn't necessarily mean that they've lost any confidence in Cineworld. It could just mean, in the times that we're having, that they themselves could be going through quite a bit of turmoil and need the money from Cineworld. But that doesn't give them a lot of pull in bankruptcy negotiations, I don't think. But I'm not an expert on bankruptcy, but I am finding this to be a learning experience. Another bit of information that I got to pour into today that I found really, really interesting was this on the Cineworld Investors segment of the site. There's a debtor in possession site, and I don't know how long this has been up here. I couldn't actually find a date on this. But you go into this, and it's got the most recent quarterly earnings for Cineworld. And so here they are. You've got the actual May 22, actual June 22, and actual July 22, and you can see the revenues here in millions. And so you can see them going from January, February, March, April, May, June, July. And I believe these are versus 2019, and actually in June they managed to hit 82% of 2019. And there was also, I thought was quite interesting, I believe, yes, May was when Top Gun Maverick came out, and then June, I believe Top Gun just continued on to bring people into the cinema, and you had Thor Love and Thunder in there. Didn't do incredibly well, but Top Gun with Thor brought in a lot of people, and they actually had a positive cash flow in May thanks to Top Gun Maverick, but due to they had to pay more to dissenting shareholders for Regal. It was this interest and principal, so their interest and principal went up just for 1 month in June, which I'm not really sure why that is, but they did have an extremely high interest in principal during that time, which went back down in July. But their revenue also went up in July, which is nice. Anyway, they got this is their cash balance, and you can see in December, after Spider-Man, their cash balance was 350 million. Then January 239, then it goes down to 198, then it goes down to 126, 115, and then you get to see the real impact of Top Gun. It's the first time since the first time that we know of since December that the cash supply went up. So that was the impact of Top Gun Maverick. It actually increased the cash supply of Cineworld by 23 million. And then you see it go down again, and then July actually goes up again. And I think what was happening, right? So you had Cineworld seeing their cash supply month by month going down, and then they get a little bit of help in May, and then June it goes down, and then they get a little bit of help in July, but they don't go back up to the May prices, so they're still down from May. And then August, beginning of the month is always bad. Apparently, according to Mookie, that the beginning of the month is always bad, and that was in this document. And then towards the end of the month, you wouldn't sort of expect it to go this way, but that's when it gets better. And then so August must have been an extremely dry beginning of August because it was so hot, and there just wasn't many films, so not much foot traffic going in the beginning of August. But we did get a message from Mookie at the end of August that I'll go into in this video also, that indicates that foot traffic did pick up at the end of August, but perhaps bankruptcy filings were already underway at that point, and so it was still worth getting the bankruptcy protection. Anyway, these are the Cineworld film release schedules and receipt assumptions. So I don't think it's really helpful to see major film releases because apparently there was 13 in August, but I didn't really notice any decent blockbusters in August. Nope was meant to be a decent blockbuster, but obviously Nope wasn't that successful, and I heard multiple people went to see it and were just a bit confused by it, to be honest. So yeah, Nope did not do very well, but there were 13 films in August, and they hit that 403. So the actuals, you can see for July were 409, and their expectation here is 403. But I think they might have gotten above that because of Mookie's recent statement that Cineworld did very well on International Cinema Day. And then they see it going up to 420 in September. And then in November, I believe this is stuff like Avatar 2. December, you've got Black Panther 2 coming out, and it's Christmas time. Loads of, winter, best time to go to the cinema, do indoor activities. So, yeah, they just see having a tough time in August, September, earnings-wise, and they need those earnings because without it, paying all of this, they'll be going down in cash supply. It's not dramatic. They can handle it. You can see their cash is 350 million, 239, 1 point. It's just in really bad months you can get hit quite badly. 111 million down in January, and so this can all turn around very, very fast. So 111 million would almost entirely wipe them out. So that is why you do a bankruptcy filing, to make sure that you don't have a temporary moment without cash. So now we got debtor in possession bankruptcy filing. As part of the Chapter 11 cases, Cineworld, with the expected support of its secured lenders, will seek to implement a deleveraging transaction that will significantly reduce the group's debt, strengthen its balance sheet, and provide a financial strength and flexibility to accelerate and capitalize on Cineworld's strategy in the cinema industry. The group Chapter 11 companies enter the Chapter 11 cases with commitments for an approximate 1.94 billion in debtor in possession financing facility from existing lenders, which will help Cineworld operate its continue in the ordinary course of Cineworld's implements its reorganization. That 1.94 billion sounds like a hell of a lot because that is a big number, but that's not actually how much money they need or will get, I don't think. What I saw was the workings out in their debtor in possession document. They went through every single cash expenditure for every week from now till the end of the bankruptcy filing. And so basically that capital expenditure total 1.9 billion, that predicted capital expenditure was 1.94 billion, and that's how much cash they could possibly need if they made no revenue. That's what I think it is. Don't quote me on it, but it does seem to line up with what I saw in the document. The group's Chapter 11 companies expected to file proposed plan of reorganization. Let me just see if anyone's commented and asked any questions. So it's still a good price to get in for a drop. I'm not commenting on whether this is a good price or not. I'm just making a video now to give you guys an idea of the information, my interpretation of the information that's come out this week. I can't comment on the price because we don't know what the dilution is. CIN have stated like 3 times that the dilution of shares is most likely going to happen, and in the recent RNS they said that they cannot guarantee the loss of our investments. Well, yeah, but that's information we already know. If there's dilution, we lose potential earnings per share. So wait to invest after dilution. So if I wasn't already invested in Cineworld, I probably wouldn't be getting into it. And I see people buying more shares, power to them. I trust that the people on Cineworld stock, like you guys, actually seem, although you say silly things like we all do, if you're getting into the earnings of businesses and stuff like that, just don't blow all your money on this. The best thing savings-wise is mutual funds and stuff like that. Cineworld is incredibly risky. It's too low to dilute at these levels. They won't get anything. Yeah, I don't see them getting a lot for diluting the stock. I think, but don't think of it as they're not going to dilute it by selling to retail investors. They will dilute the shares by selling them to the debtors. So it's not like they're selling them, but basically the debtor will write off 1 billion of debt in exchange for 30% of the shares. It won't be. They'll produce shares. So basically, Mookie in this transaction would also lose a stake in CINEWORLD. And I don't, I've seen people say that they're going to create two companies and stuff like that. Nowhere have I been able to see that that would happen. I don't see Mookie being able to orchestrate it in a way that he gets all of the assets of CINEWORLD and shareholders don't. He holds 20% of the ordinary shares. They're the same shares that we hold. But I don't know enough about bankruptcy filings, but I just assume that if he could do this, General Motors and other companies like that would have done the exact same thing. Everyone would be cutting out retail investors. The fact is, we hold the same shares as Mookie does, as his holding company, and it's come out that he's put out press statements saying that he hasn't sold those. So he could be sued if he's lying about that. So no, I don't think the share dilution. What was the question again? Yeah, they can dilute shares and get good value from the debtors. It's just that they won't be selling them to retail investors. Can you lower your webcam so we can see, as we cannot see the data? Sorry, I'll move this over here. Okay, when I go there, that's annoying. So if I move that off, okay. Now I can see the questions and you just see the screen. Okay. And which pages are, okay, I'm sorry, I can see now you couldn't see the data there. So what I'll do is I'll move that up as well. So this is the data here, sorry about that guys. So you can see the cash balance here, that goes steadily down in January, February, March, April, and then this is when Top Gun Maverick comes out, and then this is when you got you're not making as much money from Top Gun Maverick. You've got Thor Love and Thunder, and so you've got revenue going up, but you've got an enormous amount of interest in principal. And then here you've got July, they're making money again, people were going back to the cinema in July, but the fact is that they were still down 1 million from May, and in a really bad month, and August wasn't set to be a particularly good month. Nope wasn't doing, no one's going to see Top Gun Maverick anymore. Nope isn't doing particularly well. You haven't got any other big blockbusters coming out, and so the fear is that you go back to a point where you have 111 million loss like you did in January, which would take you to almost zero. Sorry about going over the same stuff. And so the next thing I think is interesting is these messages from Mookie. Mookie added in the latest statement that came out, I'm deeply grateful for the continued support of our stakeholders throughout this process and beyond, including our dedicated team members, loyal guests and members. We look forward to continuing to provide guests and members with the best cinematic experiences for years to come. The outstanding success of recent blockbusters such as Spider-Man No Way Home, that must have done amazingly well for them to have had 350 million at the beginning of before January. No Time to Die, Top Gun Maverick, June, Minions, The Rise of Gru, Thor Love and Thunder, and others prove clearly that people love to go to the movies, and that once supply of product returns, our businesses will reap the benefits. And I've done in my other videos, please check out my CineWorld sort of playlist. I try and make my other videos, this is my first live stream, I try and make my other videos more concise and just fact-based and sort of bam bam bam. This is my first attempt at sort of rambling, and you can tell that I do ramble. And so, but from those other videos, I compare the summer releases in 2019 to the summer releases in 2022, sorry, and basically it's like night and day. the summer releases in 2019, the B-list movies, take out the biggest one, because we know we've got Endgame in 2019, and that was an incredible hit, but that's the build-up of 10 films culminating together. But the other films were like, it was a Quentin Tarantino movie, Once Upon a Time in Hollywood, there was Midsummer, and a few other just really great films, cracking films that were released in August, and we just haven't had that this year. But and I've not put this in here, Mookie issued a letter, perhaps it's on the Reddit page, it is, I posted it here the other day, letter to shareholders, Cineworld might not go anywhere, but like this, I'm buying the shit out of this, who's with me? I'm assuming you're just having fun and that you're not wasting your entire life savings when I read that. I hope to God not. Going... I'm sorry, I can't find the letter from Mookie to Cineworld employees. There we go. And so someone actually sent me like the email to this, and I saw it from a few different sources, so I'm fairly certain it's legitimate. But in a word, wow, an amazing performance Saturday on Cinema Day. Once again, we saw how many people love to go to the movies and how excited they are to explore the cinema and experience the big screen, and cannot argue with the facts. Cineworld overperformed in a big way, and mainly because of you. Your dedication, commitment, and love of the industry and company is what makes all the difference. As said, to you a couple of weeks ago, we're taking steps, blah, 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 blah. But what that says to me is, when you look at these earnings here, just a little boost can go a long way. Basically, what Cineworld's worried about is this sort of transition from 350 million to 136 million. But most of that damage was done in January and March, when there was really no films. There was no foot traffic, there was no films. Now we've got low amount of films, but we've got profitable months again. We've got May and July. Just imagine what this will be like when you've got winter and big films, like you had with Spider-Man No Way Home. So that's why I'm confident that Cineworld will get its cash flow back quite quickly. But what we can't be sure of is how these bankruptcy filings are going to play out. And we can't be certain that that cash supply, that foot traffic, is going to come back. There's no guarantee of that either. But I'm looking at the the revenue here, and assuming that these are their entire costs, and they've not gone bankrupt at this point. They're not defaulting here. They've got deferrals, rent deferrals that they're paying. I think Cineworld will do okay if they can get their revenue back with these films, and that the lenders are patient with them. I think everyone in this is incentivized to keep running, to not destroy Cineworld, and I can see a way for us shareholders to come out of this holding good equity stake in Cineworld. The fact is, I just can't guarantee it at this point. I don't know what there are factors in this. I mean, I was pretty sure it wasn't going to come to this point, so I've already been wrong in my initial assumption. But who knows? It's all a bit up in the air, but their free cash flow is going to be incredible if they come out of this. And so the question is, what is significant dilution, and is that all it's going to be? And so I'm really excited. Over the next few months, I've got a significant stake in Cineworld, which I'm holding, but I am not adding to it. Certainly not adding to it right now, and I don't recommend that people do. But to each their own. It's your money. You do whatever you want with it. I'm just going to look if there's any more questions. So, okay, let me see. So if CINEWORLD dilution does happen, we basically need to wait years until the price rises again. That just completely depends on how much dilution, significant dilution is. One thing I'll say is both CINEWORLD and the debtors will be arguing over the value of CINEWORLD shares. And basically, CINEWORLD will be arguing that a stake of the business will be as much as they can possibly justify, and the debtors will be trying to say that CINEWORLD is worth as little as possible. That's because the debtors want to get as much equity as possible, and CINEWORLD want to give as little equity as possible away. And the lawyers will be battling that out, and independent financing companies will be valuing their business. And so basically, if CINEWORLD are successful at saying, look, we're a valuable business and we'll have lots of revenue in the future, then we won't have to give much equity away to the lenders. In return, they will, we are getting debt written off for this. So at the minute, we are losing our earnings per share to pay off finance debt, and at an increasingly higher interest rate. So getting that written off actually does mean that we have our earnings per share, they will be affected by this. We're not going to get a great deal from the lenders at this present time. They will go down, but theoretically we should be exchanging debt for earnings. So we will be paying less debt essentially going into the future, but we'll be getting less revenue. So really, theoretically, if significant dilution in an exchange of credit shouldn't affect it too much in the short term. A little bit in the long term, but then they could do share buybacks and that can all be good. We just don't know what the outcome of bankruptcy is going to be. And it just puts a big question mark over the stock. And also, CINEWORLD need revenue to come back. As far as I understand it, they haven't actually defaulted on their debt yet. They've just filed for bankruptcy protection. And maybe I'm wrong on that, but I don't actually see here that they've run out of cash. They're still cash positive. They've got 136 million. So it's the fact that they believe that they might default in the near future. That's what I think, and it's to protect them in that event. So what do you think? So it's a long-term play, 2 to 3 years. Yeah, I mean, I always buy stocks assuming, like in my mind, I try to imagine that I'm going to have to hold it for 5 years. But then I always have in my mind, like, one of the reasons I'm buying this is because I can see it turning around sooner than that. This bankruptcy filing is set to be finished in Q1 2023. CINEWORLD will be done and dusted with this in Q1 2023. I'll see if I've got that in this. Yep. So CINEWORLD currently anticipates emerging from Chapter 11 during the first quarter of 2023, and I think it has something to do with this. They estimate that their earnings during, and they're cash positive right now, and managed to turn it around with just a couple films, and that was just Top Gun Maverick and Thor: Love and Thunder. You got Black Panther 2, which is one of the biggest franchises Marvel has, and you've got Avatar 2, which is one of the biggest international films. And so I don't think these predictions on revenue are extreme. So yeah, domestic box office sales, they're predicting will go up significantly in October, November, December, and that's why I think the bankruptcy filings will be done by Q1 2023, because they will be in a better cash position by that point, especially if they've done some significant dilution to write off their debt. I've commented on a previous video of yours that I'm in at 55p, 27k, so if dilution lowers share value but can return to the normal in the long term, then that's the best outcome for us. Yes, but obviously if this is the thing with bankruptcy, this is why no other institutional investor is touching this stock right now, is because shareholders can be wiped out in bankruptcy. If CINEWORLD, if this gets worse, like in January, they had 111 million they lost, and so I'm more saying that I don't actually think this is going to happen, but I have to say it. If they lost 111 million again, then they'd be very, very low on cash. And it happened in January, but I don't think that's going to happen. But and also I was wrong about Cineworld getting to this point. So just want to state that I am not some sort of I'm not a complete genius at bankruptcy. I haven't studied this much. This is the first stock I've had that's gotten to this position. But yeah, so I think if things go well, I think you can do quite well with Cineworld stock, and I'm still holding my position. But obviously, if Cineworld did go bankrupt, your best thing to do now would be to get the cash that you have and put it into something else that's not going to go bankrupt. But we don't have a way of seeing the future. I'm in at 30p, 10k, but not buying anymore. Yeah, you're in a similar position to me. I mean, I bought on a few different platforms. I'm in at around 50p, and we'll see what happens. Maybe after one thing that could happen, and I think this is probably the smartest thing to do, is when it becomes really apparent. If we keep watching this all the time, I might start doing live streams every week. And if we all stay on top of this together, there could easily become a turning point where it becomes really apparent that Cineworld are not going to go bankrupt. We know what the share dilution is, and even though it's at 30p or whatever, because it's jumped significantly because of the news that it's not being diluted much, and it's not being or as much as basically, the reason it's priced where it is right now, I think, is because people are worried that it could go to zero and no one wants to lose their money entirely. Institutional investors do not want to lose their money entirely. That's like the worst thing that could happen. And so it's being... And because also what's happening macroeconomically, there's loads of deals all over the place. So most investors are going for investments that 2 years ago would have only yielded a small return. Now they can get much more. So there's simply no need to take a risk like Cineworld right now for them. But the second Cineworld can prove that they are going to be coming consistently cash positive, it does rely on knowing how much share dilution there's going to be, but I could see this stock turning around quite quickly at that point. If it goes up to 30p, but we know that they aren't going to go bankrupt at all, and we know what the share dilution is going to be, then we can lower our averages down from 50p down towards the 30p end of the spectrum, and we know we can start doing cash flow analysis based on 2019 again, and not be worried about the fact that they're going to run out of money. I hope that answers your question. Right, I did chopped this presentation together this evening, very after work. So I've been working on it for about 5 hours. So I've not had dinner. So I am gonna wrap this up, guys. Thank you so much for joining me, you three, for this video. I'm thinking of doing this once a week. If you're interested about that, yeah, please subscribe and ask questions. I'm also interested in hearing what you have to say, your analysis of the stock. And yeah, thank you very much.